high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. I always have to start with the risk disclosure. We're not financial advisors nor a broker dealer. Some people may, or maybe not remember, I spent about 15 years in the brokerage world, and I'm no longer in the brokerage side of the business. So I wanted to throw a risk disclosure up here. With that, this is why you're here, and this is something I'm actually going to detail because I like to hit each and every one of these points along the way today. The other aspect of today is I like to do sessions like this when markets are open, and I like to do that because I will fire off some live trades from time to time. In fact, I have a few that I'll probably fire off today. I've got some inventory I could place today. So although we'll do some live trades, this is predominantly why you're here. So you're obviously going to discover why ultimate trades are ideal for the current environment, so you can potentially generate monthly income. In fact, I'm going to talk about the current environment here momentarily. You're going to learn a trading symbol that professionals use on a daily basis to be able to generate and create ultimate trades. And I'll explain what ultimate is as well. Learn how and where you're going to find edge as a retail trader. That's absolutely essential. You know, people, they use that word edge, you know, constantly, and it gets thrown around constantly, but what does it really break down to? And I'm actually going to show you that today. You're going to reap the benefits of high probability trades while learning, okay, really how to mitigate some of the exposure. I mean, one of the keys to high probability trades are, if you will, not taking large losses. And it's one of the keys, obviously, to this business. And of course, find which products are going to make the most viable candidates. That is part that I am just, you know, incessant about, is that candidacy, what you trade before you do anything, before you even walk into a room with a computer. You should know that what you're going to trade can actually separate you from making money from losing money. So you're going to learn what's a disaster and what's a real candidate for positions. For those of you that are a little bit new here, we give you a bit of a gift for attending today. Stay with me right until the end of the webcast. Why? Because we'll actually present to you the auto expected move indicator. If you've never tuned in to anything that we've ever done before here at TheoTrade, well, this is your first time, welcome. This gift, okay, is provided to you simply because we use this indicator constantly throughout not only today's presentation, but really in any of the videos that I would do, anything posted on YouTube. I talk about the auto expected move indicator pretty consistently. I mean, it's something that I use literally every single day to be able to execute upon different trade ideas. It's a $500 value. It's pretty much the most complicated, you know, script you've ever seen thrown together. And you're like, well, what does it do for me? You know, I'm actually going to display just that. You know, so during today's presentation, as I was saying, this is a screenshot that you're looking at right now. I'm not that big of an advocate of even using like slides. So from time to time, I'll actually deviate to live trading application. This trading application that you're seeing right now, and again, everybody always asks, is this live? It's live. This trading application happens to be Thinkorswim, which is now owned by none other than Charles Schwab. It was bought by TD Ameritrade. Now it's Charles Schwab. This platform over here, this is Tastyworks. And I actually go now between the two of them. And I'll describe that a little bit, but the expected move indicator that you saw moments ago, here it is actually in action. And what these lines on the screen represent, and I'm telling you, this is, you know, I'm emphatic about certain aspects. First of all, I'm not a big chart guy. I'm a much more of a quantitative trader. If you're unfamiliar with that terminology, it means, okay, I'm less a chart geek and much more about statistics, anything with that I can actually put probabilities, numerical value behind. But if you take a look at this expected move indicator, what you're seeing here, these three lines, okay, this happens to be none other than the QQQ. This is what the option market depicted risk to be. The option market said we could go up this much or down this much. These lines are not adjusted on a daily basis. The lines, they are static. It's literally 1 week to the next. So I'll just give you a quick example over here. This market says, well, the QQQ can move up or down $7 this week. There's no directional bias to it. And just to give you a, you know, for what it's worth, you can see the QQQ hit the upper edge of the expected move, stopped on a dime, and literally that's where it's been ever since. It is an incredible indicator. There's so many different uses for this particular indicator. By the way, speaking of this indicator, take a look at the financials this week, right? Pulling back right towards the edge of the expected move. It's incredible. It's insightful. We give it to you as a gift. Stay with me right until the end of this webcast today. And I'll actually provide you a link to go grab the auto expected move indicator. And again, I can't stress enough, it's more than worth your time. Again, the indicator is incredible of the number of features built into it. So with that, let's start to jump into this. A couple of housekeeping items here today. In these housekeeping items, listen, this is skill set. I'm going to throw a lot at you today. I try to challenge pretty much everybody. I think that if you're going to spend the time to be here, focus on being here, like shut the door, turn off Skype chat, whatever else might be distracting you. Definitely don't just close Facebook, delete Facebook permanently. Okay, the world would be a better place. Phones on silent mode, kick the kids out. Grandkids, kick them out. It's the best part about a grandkid. You can actually hand them back. I'm only saying that because I have little kids myself right now. Listen, you took the time to be here. It's important. Focus on being here. This is a little bit about me. So again, my name is Don Kaufman. I tell you this right up front, not just my name, but if you need to get a hold of me after today, we use a common inbox, and you just go right here. If you want to get a hold of me, just support at TheoTrade.com. And I'm simply stating that because I don't want you to think like, once you hear from me, you never get to communicate again. We answer emails, hundreds and hundreds of emails a day. I answer emails all throughout the course of the day. We actually say, hey, if you need to get a hold of me after today, just put Don in the subject line and it'll come right to me. So we use a common inbox, support at TheoTrade.com. So here's a little bit about me, because I know that some of you guys are brand new. Anybody here brand new has no idea what a TheoTrade even is? Huh? Come on, admitting it is the first step today, people. It's anybody? Okay, me. All right, couple of me's in here. It's kind of quiet in the chat room. All right, so I'll give you the dime tour of my background. So unlike I think a lot of people involved in trading, like people have these phenomenal stories of how they got involved in trading. I don't have a phenomenal story. I actually grew up literally around traders. That was traders from Chicago. So I had some extended family that was involved in the market making business in Chicago in the 1970s. So I had an uncle that was on a trading floor. He started in 1977, and he built a trading firm out of the Chicago area. It was called O'Connor and Associates. He built literally from 1 seat to over 500 seats in exchanges worldwide. He ended up selling the company in the mid 90s. It was a multi-billion-dollar deal. At the time, there were like 44 partners. It was really one of the largest trading firms. They sold the company to the Swiss bank. So O'Connor became the driving force behind the Swiss bank. And then it became UBS Warburg. The rest is kind of history. But I grew up around that. I always knew a little bit about trading. So in the late 90s, I got out of college. 3 weeks out of college, I ended up in Chicago. I traded at SIBO for a while, but predominantly I was upstairs. I've always been, because I didn't start trading until the late 90s, I like to trade behind screens. It's always made a lot more sense to me. So I started trading behind screens. Only about 2 years after I was involved in the business, I was invited by a startup brokerage firm. Nobody ever heard of the brokerage firm at that point. It was called Thinkorswim. So I was invited to come work for them. And they said, what am I going to do for you? I don't want to sit, on a desk all day and just, answer, client phones. So they said, no, you're going to run the education division. Fantastic. Sounds like a good deal. I was 24 years at the time. They gave me a corporate credit card and said, go buy plane tickets and fly all over the world. And I did that. I ended up on the executive team for Thinkorswim. We took the company public in 2007. There was no getting out at that point. In 2009, we were acquired by TD Ameritrade, and I went on to actually run not only education for Thinkorswim, but I went on to run education for TD Ameritrade. And from 2010 to 2015, I ran education for 7 million clients of TD Ameritrade. And you're like, oh, okay. Why'd you leave? I had a 5-year lockup clause. People always ask, why did you leave? 5 years. 5 years. I had a contract. So the day my contract was up was February of 2015. I exited and we launched TheoTrade in 2016. What we did though, while at both Thinkorswim and TD Ameritrade, is we studied the largest option client order flow in the entire industry. And that's a lot of the information that I'm going to bring to you today comes from the reality of studying client order flow for the better part of 15 years. When I say studying client order flow, basically means we saw everything that you did. We can tell you everything about everything you ever did in your trading account. If you traded stocks, if you traded options, if you traded futures, we knew success rate. If you traded covered calls, if you did iron condors, okay, you name a strategy, and I can actually tell you definitively what some of the success rates of different strategies happen to be. More appropriately, though, we actually built a lot of the education specifically here at TheoTrade based on the knowledge of what traders were doing, okay, and what worked best for retail traders. I mean, watching people lose, if you will, billions of dollars can help you zero in on what is most effective for retail traders. So that's a little background on me. Still do some media appearances from time to time. This is actually TD Ameritrade TV. Crazy enough, the last time I was in Chicago was, wow, that's almost 2 years ago to the day. It's the last time I was in Chicago, which is crazy for me because, I spent a lot of not only my career, a lot of, childhood in the Chicago area. So it's been about 2 years. This is a CNBC appearance. Myself pitted against, of course, Kevin O'Leary from Shark Tank. I was the short, he was the long. I was right, at least for a period of time. Let's jump into it. What are ultimate trades? So today we're going to talk about ultimate trades. And I'm going to tell you right now, ultimate trades. First and foremost, this is not about ultimate. It's not short for ultimate. Okay, it's not. It has everything to do with volatility. And ultimate trades right now are just bottom line. This is what is not only in play, this is what's working right now. It is absolutely on fire in really, the last, probably about year plus of trade. It has been just relentless. And I'm going to show you what is so relentless and what's so effective right now. And moreover, that this effectiveness is not going to dissipate anytime soon. First of all, higher volatility has resulted in significantly more options premium. Now, I said the O word. I said options. Okay. I definitely said the word options. So yeah, even if you've never traded an option before, you're fine today. Okay. I want everybody to know, like, who here has never ever had experience with options? Anybody? If you've never had experience with options, just grab some of the bigger concepts. It's fantastic. It's okay. All right. There is a side of this business that, as I said, it's just absolutely on fire. And that is the options world. The options world, since the onset of COVID, has exploded like never before. Again, I spent 15 years in the brokerage industry, 2 years before that, making markets and as a risk manager. No one ever dreamed that the options activity would be anywhere near as high as it is right now. I'm serious about that. Like, if you asked me even 5 years ago back at TD Ameritrade, nobody saw levels like this. It had nothing to even do with free commissions. I mean, it is on right now. People trade and trade just 40, 45 million option contracts a day now are trading hands. So since the onset of COVID, there's higher volatility. And that's actually resulted in significantly more options premium. But people go, no, the VIX, because when people talk about volatility, they always think, what about the VIX? So here, let's actually cruise in here. Take a quick look at the VIX. Okay, there's the VIX. And if you look at the 3 years on the VIX, it's pretty evident that if you look 3 years in the VIX, okay, since the onset of COVID, which is right here, there's been higher volatility, but it's dropped right now. You're right, it has dropped. That's not exactly what we're trading. Okay, even though volatility is higher, that's not exactly what we're trading. We're actually looking a lot at what's called implied volatility skew. It's historically high levels. I'm going to show you it in a minute. Okay. And the other aspect in here that really resonates is the volatility of the volatility remains at historically high levels, which is actually what Ultima is. If you're curious what an Ultima trade is, and again, not ultimate, if you're curious what Ultima is, it's like a derivative of a derivative of a derivative. What Ultima is, there's this thing called volatility. All right, you can even use the term Vega. So there's Vega, okay, and then we have what we call Vama, and then there's Ultima. So there's Vega, which is the sensitivity, okay, to changes in volatility. There is Vama, okay, and Vama is how fast your what? Your Vega is going to change. And then there's Ultima, which is Ultima is actually the derivative of the derivative of the derivative. It's crazy, but Ultima is actually why, okay, this strategy makes money right now. And that's why it's called Ultima. It has a lot to do with skewness. So everything you guys do in your life in some way, shape, or form, and I love to explain it this way because I think it's like the only way it really kind of gets driven home. Everything you do in your life can fit on a distribution curve. Like this is very normal over here. That's a normal distribution curve. You know, there's good drivers, there's bad drivers, but most of us fit in between. Now, what would be skewed? Well, these are different forms of skew. And I'm going to tell you right now, okay, the marketplace is just downright, it's skewed right now. And the amount of skew that is in, okay, the marketplace as a whole. When I say skew is in the market, people are like, I don't even know what it means. Okay, it's okay. Calm down, everybody, because I'm going to show you a symbol right now. You can go look it up yourself. The amount of skew, though, in the market right now, it's not just phenomenal. It's creating, if you will, like a distortion. And skew is just like it sounds. It's literally a tweak of the distribution curve. And that's the only reason I wanted to throw this slide up here. The next, this is skew. What's the symbol? SKEW. But if you pull it up, it only calculates like once a day at the end of the day. But I just wanted to show you in the history of this particular index, all right, being created in the history of it, which was only going back to 2011, skew has never been higher. Okay. What's going on? What is skew? Skew deals, okay, with, again, a distortion, if you will, in option pricing. And that's exactly what we're going to be looking at today. And we're going to build some ultimate trades around it. Okay. I'm going to keep it simple. I'm going to keep it light. Okay. But I'm going to tell you again, record skew. And if people are kind of confused about this, any decent trading application, you can go type in the term skew and you get these little dots on the screen. You're like, what are those? Again, it's only calculated at the end of the day, but look at skew. It's a 15-year chart. Close up this left sidebar. Look at skew. It's off the charts. It is off the charts. And I'm actually going to give you a reason that this is not going to abate. It can't abate right now without volatility exploding in the markets, which will only help us even more. All right. So onward and upward. So I wanted to introduce you to the term Ultima. I wanted to introduce you to why markets are really good right now. But more appropriately, like, you hear this, you're like, yeah, Ultima, skew. I never knew that before. How can we use it? Everything that we talk about here, okay, it's all for nothing if you can't turn this discussion into P&L. And that's one of the things I think, like a lot of people, it kind of gets lost in the translation. Like, it sounds really good, sounds good at the cocktail party, but hey, listen, you need to be able to make some money off of this, right? So skew provides edge in the sale of out of the money options. Bottom line, again, I said the O word, I said options. Skew provides edge in the sale of out of the money options. It's incredible right now. Many traders, okay, that are new in this business are currently buying options. And in effect, they're actually tweaking the pricing to be beneficial for premium sellers. I want you to think about this and be very, very honest. How many people have started trading options inside of the last 2 years? Come on, be honest over here. How many people have traded options for the first time, okay, in like the last 2 years? All right, we have a pretty good number of people on. So there's a couple me's. So this is a shy group. Okay, these are interactive. These are not rhetorical questions. So if you actually look at the number of people, okay, that have actually just started trading options in like the last 2 years, more brokerage accounts have opened, okay, in the last 18 months, like than in the previous, almost decade. Think about that for a second. Robinhood, people had heard of Robinhood a couple of years ago, but Robinhood, and millions of clients, where do they come from? And most of those clients, they're on the buy side of options. How could I possibly know that? Because they don't allow you to sell options at Robinhood. I'm not picking on Robinhood, but it is completely and utterly transparent. What people are doing right now is totally transparent. So you have all these what we term premium buyers, right? Everybody's on the buy side and is actually tweaked the distribution so much so that, selling options premium wasn't all that great the last decade. Right now, okay, it's a party, people, and I want to be there. Selling options premium is where it's at right now. Not only is skew is there, but the skew is being caused by this just influx of retail clients, and it's unbelievable. Learning to sell options. Many of you have probably heard through the grapevine that selling options is a pretty good way to make money. And people hear that stuff all the time. I mean, again, a lot of people have heard selling options is a great way to make money. But if you've experimented with selling options, I'll tell you, you know that there's risk involved. I mean, people make money to get killed because they don't know how to control risk. When you're selling options, risk control, which is risk mitigation, hedging. Okay, if you've never heard the term hedging, it's risk mitigation, not chopping the hedges in front of your home. But risk mitigation is absolute paramount. So there are times though that selling options premium, there is so much edge in the side of the business right now. And that's exactly what I'm going to explain to you. So today's session, just going to separate the myths from some of the real risks. Okay, the fact from the fiction, all about selling options premium. And again, I implore you, even if you have no experience with options, this is not going to be over your head. You want to grab big, broad strokes of logic. There's other individuals that do tune in today. They say, I never am going to trade an option. That's okay too. I'm telling you, you're going to get insights today, all right, to not only options, but the understanding of higher probability trades like you've never had before. So don't panic. You can do this. Now, I put this slide up here for a specific reason, because at this point, there are some people that have absolutely no options experience, or maybe you do have options experience and you still have no idea what you're doing. If you know nothing about options, today's session's all right for you. Like, first of all, I just want you to be able to grasp big, broad strokes of logic. If you're new to this, big, broad strokes of logic. Don't worry about like the finite details. Now, on the flip side of that, there are some experienced individuals in here. I know who you are because you're actually already asking some detailed questions. You've got experience under your belt. Then you want to start to look at the nuances. And when I start bringing up the live trading screen and talking about different expirations, looking at the deltas, okay, that's more for you. So there's really going to be both ends of the spectrum here, from absolute novice to the most extreme and everything in between. One aspect, though, I also want to cover before I dive deep into this. Selling premium, you can now do with an extremely small account. Actually, with $2,000 in a funded margin account, with $2,000 in a funded margin account, you can sell premium effectively. And in fact, I'll even show it. By the way, you can also do this inside of retirement accounts. Retirement accounts, you do have to have $5,000 in the account, but you can do this in a retirement account. In fact, I have an account over here at Tasty Works. Okay. And this position in here, has very nominal. I'm tying up like $1,700 of capital. So listen, don't panic. Everybody's going to be able to do this. Let's dive right in. There's a lot of different facets, a lot of different terminology for selling premium. We talk about this term like selling premium. What does selling premium really come down to? Okay, it can be referred to in as a number of ways. First of all, selling premium means in some way, shape, or form, you are selling options. Right? Selling options. And we're going to talk about options in a moment. And you go, well, I never owned an option. How am I going to sell an option if I've never owned an option? That's okay. Calm down there, right? You can sell something you've never owned. You can use the term selling premium. You can use the term credit spreads. People have talked about short call spreads, short put spreads, delta neutral trading, selling naked. I'm out there, baby, and I'm loving every minute of it. So all of those are terminology. Even delta neutral can be on the buy side or the sell side, but it's still selling premium. Selling premium can be used for both bullish and bearish trades, but generally, okay, it's considered more market neutral. So you're not going to see a lot of MACDs, you're not going to see a lot of Fibonacci's, not a lot of Bollinger Bands on my screen today, but we are going to talk about selling premium. Probability and profitability. This is the next. This is what I was talking about with big, broad strokes of logic, okay? Trading in general is just based on probability, whether you like that or not. People, they convince themselves of all kinds of crazy things in this business. But listen, the bottom line is trading is based on probability, okay? We can create trades all day long with a 90% probability of success and yet still lose money. Now, a lot of people, they don't usually come on to webcasts and somebody says, well, you can still lose money. Like, listen, we're going to look at the reality of trade today. I don't want to, sugarcoat anything. you can create trades right here, right now with a 90% probability of success. But probability alone does not make you profitable. I'm going to stress that again. Probability alone does not make you profitable. Remember that, and remember that always. When I say that, you can be right 90% of the time, I recognize that, you might fish around on the internet and you go to some website and some website says, follow me. I am right 95% of the time. Watch this, okay? I guarantee you in under 15 seconds, I can make you right 95% of the time. All you have to do is go open up, okay? There we go. We're gonna go to the spiders. We're gonna go over to the trade tab in the spiders. We're gonna come out, let's say 50 days. We're actually gonna open up a category in here called probability OTM, which is probability out of the money, okay? We're gonna find a probability out of the money that, lo and behold, look at that, 95%. It's a miracle. I just found something that has a 95% probability of expiring worthless. That means nothing. So stop looking at probability, okay, as the, that's a wonderful thing, okay? These probability calculations, let me tell you, we built those in, 2001? It's 20-year-old kind of technology in here. Every major trading application should have that now as well. But that probability alone does not make you profitable. Okay, markets are always a trade-off. There's a series of trade-offs. Higher probability can equate to more risk. So again, you could be right 90% of the time and still lose money. So where can you find edge? Because that is what people are here for today. We got to talk about where you can find edge, okay? Because we're about to show you something very, very important. So we're going to discover probability and premium selling tactics. One of the first things I do just to I guess, initiate you, okay, into the idea of premium selling. We're going to go ahead and just pull up a quick example here, all right? And I'm going to just draw this right on your screen right now. And I just want to give everybody a feel, okay, for what selling an option looks like. By the way, in no way, shape, or form is this an example you should run out and do. I just have to give an example, okay, that prefaces the other examples we're about to do, and then some live trades, right? So one of the first things I want to show you is this is a stock trading at $50. Okay, and by the way, in my examples, I always call stock. Okay, stock. All right, so stock is trading at 50 bucks. I do not own the stock. I do not want to own the stock. I do not have to own the stock. Okay, I have too many kids and reading green eggs and ham very often. I'm going to go out there and I'm going to sell, okay, 60 call. I'm just going to sell a 60 call. You go, you could do that? Yes, you can do that. We're going to sell a 60 call and we're going to collect a $1, right? Credit. That's it. Okay. So again, what's the trade? The trade is the sale of a 60 call, okay, to which I actually collect $1. Now, that's it. That's the trade. Seems pretty easy. Okay. So how can you even do this? First of all, do I own the stock? No. Do I want to own the stock? No. What am I doing? Just selling a 60 call. You go never own the 60 call. So let's go through that for a second. For those of you that are new. Okay. Options, first and foremost, are good for periods of time. What period of time is this option? I don't know. Let's get crazy. Let's say that this option is good for 1 month. 1 month, 1 month, 1 month, 1 month. So that option's good for a month. So that dollar credit isn't really mine until what? After the full month passes. So we'll come to that too. So I go out and I look at the 60 call. What's a 60 call? For those of you that are brand new to options, and again, bear with me over here. And don't worry about margin, okay? Breathe, people, breathe. Hold on. So you go out and you look at the 60 call. What's 60 call? Well, you could buy a 60 call and you could sell a 60 call. You never had to own a 60 call to be able to sell a 60 call. I'll get to that in just a second. What is a 60 call? If you buy a 60 call, it gives you the right to buy the stock at what? 60. So if you buy a 60 call, it gives you the right to buy the stock at 60. Do I have to buy the stock at 60? No, just gives you the right to buy the stock at 60. Why would I want the right to buy the stock at 60? I don't know. Maybe you think the stock is going to go up. Maybe it's a $50 stock. You think it's going to go to 500. Maybe you think this is going to be like AMC. Yeah, it's going to fly. Maybe you're just, a kid right out of school, just trading for the first time and has no idea. Okay, it's fine, whatever. You're buying a 60 call because you think the stock's going to go up, right? And can the stock go up that far? Yeah, but like that's not that good of a probability, right? So instead of buying the 60 call, which gives you the right to buy the stock at 60, I'm going to sell a 60 call. And that confuses people because they go, how can I sell something that I never ever owned? Like, how can I sell a 60 call? I never owned a 60 call because you're selling yourself by selling an option. You're selling yourself into an obligation. This actually, even for experienced people here, by the way, pointing over here is pointing the other monitor. Even for experienced people here, they don't really get that so much. Like you never hear that, but you're selling yourself into an obligation. What are you obligated to do? If you sell a 60 call, you're obligated to give someone your stock at 60. You go, excuse me, Don? You go, yeah. I don't own any stock. And I go, I know, you don't. So if you sell a 60 call and you just sold it and did nothing else and you don't own stock, that's what we call selling naked. That's where the term naked comes from because you don't own the stock. And if you sell a 60 call, you're obligated to give somebody stock at what price? 60. You go, what happens if the stock goes from 50 and then jumps here to 100? What am I? I go, you're screwed. And you go, oh, that's not good. Okay. Because if the stock goes from 50 to 100, you're in trouble. You're in big trouble. But let's not get ahead of ourselves. I just want you to understand the risk of the stock going to like 100. So what can happen here? So let's say you put this trade on, you collect $1. And for the next 30 days, you look at the screen, you go, am I going to make $1? I'm going to make $1. And you're all stressed out. And watch this. The stock, it stays flat the first day, goes down the next day, then it comes up here. Okay. And then it comes back down here. You're like, ooh, selling options premium is actually kind of fun to watch people get tortured for like the first time because the market moves all over the place. And in the end, what does it do? Absolutely nothing. You keep your $1, you walk home. It's wonderful. Okay. All I want to get to though at this point, think about how high of a probability this happens to be. Okay. Right. And think about the exposure on here too. If you're selling naked, you could get killed. I told you. What did I say initially about options? Okay. If you sell options, it's very important about the option you sell. It's very, very important to get edge. But the most important thing about selling options is what? Talked about risk mitigation. It's about hedging. Okay. It's about when this thing does go to 100, you're going to laugh and go, oh, look at it. You're not going to get killed in there. Never going to leave you open-ended like that. Okay. We'll come to that part a little bit later. But I want you to understand at this point, and only at this point, how high of a probability this is. The stock can stay flat. If we stay flat, you make your buck. If we go what? Down, you make your buck. If we go up, okay, still probably going to make your buck. The only way you start losing money is at 60 plus $1, which is at 61's your break even point. From a probability point of view, this trade's actually got what? Got some decent upside. Now, we can take this into context of the real marketplace. Is there a stock trading around 50? Is there anything exciting trading around 50? I always look to like Twitter. I know Twitter's not a $50 stock anymore, but Twitter at least has a little bit of like, craziness around it. Anyway, here's an option trading. There it is. Okay, this one will work for an example. It's just an example. Relax. Okay, here. This is Twitter. And this is real. Like it's, look, it's moving. Is it moving? It's moving. This market's not moving that much today, but it is moving. So if I sold, let's say we sold an 80 call in Twitter, what would you collect? Right now, about, let's say 96 cents. Okay. But that's 85 days out. You're like, oh man, this is really far out in time. Okay. Don't worry about that right now. Just understand the concept. And by the way, that gives you what's the probability of that being out of the money? 90%. It's a home run. The crowd goes wild. Except again, as I said earlier, like never let probability alone, okay, get to you. Like seriously bothers me. Never let probability alone, because when I say it has a 90%, pretty much any monkey can figure that one out. Figure it out pretty good. That's what a lot of people, again, they put it on their websites like, I was right 90% of the time. And I'm like, that's awesome, because there's this thing called probability, and you can just look at it and it says 90%. Session over at that point. Listen, that's very misleading at that point in time. Okay. So we understand, just generally speaking, just selling an option out of the money. Okay, now we're going to go somewhere. Selling options equals positive time decay. We're building, okay? Don't think I didn't get to anywhere yet because we're building on this. So selling options equals positive time decay. And when you sell options, I mean, the bottom line with selling options, as you sell options, the dwindling of options premium happens as each and every day moves forward. As time passes, the options that you sold decay exponentially. So let's take a moment to review time decay. Now, this is where, are you experienced in trading options? Pay very careful attention. This is a decay graph. And this decay graph, and this is what I kind of go off about. So you're going to hear me, I'm a little feisty about this. When people first learn about options, it is taught to them in a very, obscure way. See, most people that even trade options and most experienced people that trade options, they don't understand, how theta decay really works. So what happens to a lot of people is they go out and they buy an option and they pay $3 for it, and that has 1 month to expiration. So here's your $3 right here. And what happens over time is that goes boom, and then it's worth 0. So you buy this option right here for $3. And then about 10 days passes, you go, I'm okay, because the option's worth only like $2.75 at that point. Anybody ever done this before? So when you go out there, you buy something for $3, Then after about 10 days, it drops to $2.75. You're like, I'm okay. And then maybe another, couple days passes. And now you're starting to get nervous because it becomes worth $2.30, starting to accelerate just a little bit more. You're like, no, it's okay. It's only gone from 3 to 2.30. And then before you know it, you're like dropping off in here and like the option's only worth like 80 cents. You go, I'm not okay. And then you basically say, screw it, because it's only worth 30 cents. And then it ends up expiring worthless. I mean, that's the livelihood of people on the buy side of options. By the way, it's not a bad thing. It is not a bad thing. But I'm going to tell you something about this. The decay graph that you are familiar with. By the way, has anybody ever experienced this before? Anybody? Okay. Nobody's ever experienced the theta burn. Okay. I feel the burn. But if you've experienced like this theta decay, you know full well that it's pretty dead accurate on there. Okay. The only problem with that is people taught you a decay graph that is what we term a near money option. And what that basically means is for the stock is trading at $100. They're talking about an option that's right around 100. They're not talking about an option like you might have a stock at $100. What happens if you're trading a 130 call? That call is $30 away from the stock. That's actually what we term an out of the money option, OTM, out of the money. But you've learned the decay graph for what's termed at the money. Now I'm going to blow your mind for just a second. So let's get to it. So we reviewed just a little bit about options decay. The closer you come to expiration, the what? The faster the option burns. Yes? Anybody? Okay. Anybody ever experienced? Come on, people. Admitting it is the first step today. This is the 12-step program to trading. You must admit the wrongdoing. Have you ever bought an option and watched the option completely burn into nothing along with a portion of your account? Huh? Anybody? Okay. That's the exciting part. Now here's the part where I'm actually going to kind of blow your mind. So we're going to discover probability and premium selling tactics. So here's a $100 stock. And in this $100 product, switch this up a little bit. In this $100 product, again, I'm going to go out and I'm going to sell an option, just like I did in the $50, okay? But I'm going to do this a little bit different. So here we are. Now, by the way, I'm using calls today, predominantly because calls are just like easier to learn. I'm also going to cover puts in a moment, but I do this to keep people like on an even keel, right? So now we're going to go out and we're going to sell a 120 call. And guess what? I'm going to make that exactly $1. I'm just trying to keep my example's easy. So we're going to sell a 120 call and we're going to sell that one for exactly $1. Okay. But this time, look how far out of the money we are. The stock is trading at 100. I'm trading the 120, which is how far out of the money? It's 20% away from the underlying. And this option is going to be good for 3 months. So what do? So now I'm just going to sell a 120 call. I'm going to collect $1. Okay. I'm going to collect $1. That's it. What can happen to me over the next 3 months? Okay. What can happen to me over the next 3 months? I can laugh, I can cry, but I have a 20% buffer, 20% buffer from where I am to where the stock is, right? I'm out here. The stock is over here at 100. Do I own the stock? Absolutely not. I do not own the stock. I have sold a 120 call. And in this particular case, selling a 120 call could take extraordinary risk, but I am really far out of the money. Like to the point where if that stock were going to come up, man, you would see that thing. You're like, come on, bring the pain. That thing is a mile away. 20% differential out there. The question that always looms is why 3 months? Because now we're actually going to teach you the reality of trade. Okay. This is the reality of trade. Blank that. If you're ready for it, here we go. I'm actually going to go into a live market. Okay. And when I say if you're ready for it, here we go. We don't care what we sell so long as we we make money. We make money consistently on a month-to-month basis. Sound fair enough? And okay, primary thing, we have to mitigate risk. So when I say that with all due respect. We don't care what we sell so long as we can actually make some money off of it on a monthly basis and we mitigate risk. What do you care? So when people learn to sell options, they make an absolutely critical mistake. They always hear that options decay faster the closer you come to expiration, which is, it's true, but it's true of at the money options. They don't understand that decay has shifted. Okay. I'm actually going to show it to you bare bones right now. We're going to go into the spiders. Why the spiders? Because it's the absolute unequivocal marquee of products. Like the spiders, they get more size done than any other product. Most products combined don't even compare. The spiders today, and today is pretty much sloptastic. I know it's a little bit down, but today the spiders are doing almost 3 million contracts. Name another product that does that size. Not even the SPX is doing that size. And the SPX is 10 times the size of the spider. Okay. But like, look, the SPX, I'm doing 600,000 contracts today, not the QQQ, not AMC. Wait, could be AMC. All right. So I'm just poking fun over here, but AMC about 600,000 contracts. But the spiders are the absolute, pinnacle of market liquidity. Bear with me for a second. I'm going to open up 85 days. Now I'm going to go find an option, okay, 85 days out that's trading for around $1. Why around $1? Because I told you, I just want to keep my examples easy. Here's one. Here's an option, okay? Now I'm going to write this up top. So bear with me as I kind of take you through this example. Don't freak out on me, anybody, okay? We're going to go out and we are going to sell, in this case, it is going to be a November 480 call. And that's going to trade. I'm just going to put it right at $1. Okay. I know it's trading for 98 cents, but I like my dollar example. So I'm going to go out and I'm going to sell a November 480 call. What am I trying to do? What am I trying to do? You tell me again. I'm trying to make money. I don't care how I do it. Okay. I just want to make money. I don't want to take a lot of risk. So why am I 85 days out? Because there's a place to make money and take not a lot of risk. But I want to make money, but I can't wait 85 days. Are you kidding me? Can you sit here and sweat for 85 days? You'd be like, you'd be like panting for a while. Like, I can't take it, man. It's 3 months. It's too long. I'm not asking you to wait 3 months. So I want you to go out there and theorize that you just sold this. In fact, let's not theorize it. Let's actually work the order. Work the order, people. I'll work an order at $1. Work it. So I'm just going to work it at $1. And you can see I've already got a position right next to it. Right. So I've got positions right next to it, yada, yada, yada. Doesn't make a difference to me. So I'll work this one at $1. I'm not going to fill right now because, well, I'm working. So, all right, push that aside for a second. So close up November. Now, if you want to know what a November option is going to be worth 30 days from now, look at an option 30 days from now, meaning that the November option, okay, it has its future mapped out. The November option is going to be worth what the October option is worth right now. But it's not exactly 30 days, it's 35 days. What I'm trying to point out is what's the difference between 50 days and 85 days? Ooh, I know, it's 35 days. So if you want to see what a 480 call, assuming all other factors held equal, let's assume that the market stays flat. Is there good options decay 85 days out? That's what I'm asking. Is there good options decay, all right, really 35 days out, or sorry, 85 days out? In the 35-day window, can I make money from 85 days to 50 days? And the answer is, let's go to the 480 call, the 480 call, 480 call. So you wait 35 days, then you buy it back. Look at that, option's worth 19 cents, okay? So let's say all other factors being held equal. Don't worry about market direction, okay? After this, we just buy it back. So we buy back our November 480 call exactly 35 days from now. What's it trading for? Let's make it worth 20 cents. What do we make on there? 80%. You can make 80% in 35 days. You go, how is that possible? Why is nobody else talking about this? Because most people do not look at the mathematics behind options. They just assume what they've been told for the last 30 years is true. Options decay the closer you come to expiration. That's true, but that's the at-the-money options. They're not actually looking at what's called Ultima. They're not looking at the volatility exposure. You know, the easiest thing, why people are not looking at this? The easiest thing to explain to you is all you had to do was look over here. If you sold an option that expired 8 days from now, or here's 4 days from now, that option's only at 11% volatility. We're all the way out here, man. This is like 20% volatility. Volatility is almost double. So you're selling more volatility. So what you're saying, you can make as much as 80% in 35 days. I didn't say that I was going to sell something with 35 days. I just said I would hold the position for 30, 35 days. That's it. Okay. I mean, you can sell good premium, but the premium that you're selling now is further out in time and it's further out of the money. The cool thing is, though, that stuff that's further out of the money, and I want to reiterate this, stuff that's further out of the money takes way less risk. Way less risk. Look at this. Let's even open up December. Let's get crazy. Okay. Let's open up December. You go all the way out to December. In fact, you know what? I don't like this one. I'm going to cancel this order. I'm going to go all the way out to December to 113 days out. Okay. Now that's crazy business. I'm 113 days out. Okay. And I'm all the way out here. Look, I'm looking for an option right around $1. So look, this month's 91 by 94. I'm actually going to work an order to go to 93 cents. It's at 93 cents right now. Okay. I'll work the order though at 93 cents. So work it. So now I've got the order working. If you want to see my order working, here we are. We're actually going to come into the trade grid. Order is working. You can actually see my order is working. It's working at SIBO. Okay. And we're on it. All right. When I say we're on, this may or may not fill. I don't know. I will not fill an order unless that marketplace comes to me. I don't come to it. I don't need to fill it. I don't want to fill it, but I'll take it at 93 cents. That's the way you need to think about your orders. But even if I went out some 113 days, and I want to explain something to you again. So now I'm working this order right out here and I work it for 93 cents. Okay. What's that option going to be worth 30 days from now? This is less than 30 days. Okay. So again, what are we working? We're working a 490, okay, call. I'm working a 490. So if I looked at the 490s a month from now, those are trading for about 40 cents. So I'd be able to sell it now for 93 cents, and less than a month from now, I can buy it back, okay, for 40 cents or less. That's not bad for a return. I mean, you're looking at like a 50 to 60% return for what? Less than 30 days of holding a position, which is phenomenal. People, this is what Ultima trades starts to break down to. Now, again, the thing that people get caught up on is how to do it and how to actually mitigate risk. We're not done. I mean, that's what we're talking about in here, okay? We're not done. And by the way, somebody was like, what happens if the spider goes up like 10% in a month? I'm going to show you that, okay? Don't think we haven't traded this, because I'm going to show you every trade this entire year. Every single trade I've done in what's termed the Ultima portfolio for the entire year. But I want to answer that general questions. Why sell options this far out in time? So in the example, you've noticed I sold options literally a few months out in duration. Typically, traders sell shorter duration, but that's why people are tuning into this webcast and why, what Ultima is about, what TheoTrade is about. It's about criteria. It's not about like, anybody could sit here and say to you, you should sell options. Okay, anybody can say that. It doesn't mean anything. You need to know what options to sell, how far out in time, what should the probability be, how do I mitigate the risk? That's what it's about. Because for those of you that sold options, I want to give you a little bit of background. Now, this is for those that are experienced. If you're inexperienced, listen, pay attention, grab big strokes of logic, but I want to give you the plight of those that have actually sold premium. Some of you guys have done this before. You have tried to sell premium. How many people, again, have tried to sell premium? All right, quite a few of you. So they tried to sell premium. Let me give you the livelihood of a premium seller. This is what I call 90% probability and the 10% hammer. You see, we're doing trades right now, and I'm explaining trades to you that have an incredibly high probability of success. When you sell something that has a 90% probability of success, you do realize that that breeds confidence. You're like, I feel warm and fuzzy inside. Okay, I'm going to be the next Buffett. What a lot of people don't realize is that 90% sounds really good. Okay, actually, it sounds great. But 10% of the time, the market's going to rip your face off. If you've never heard the term rip your face off, okay, just wait, you will. Rip your face off means basically got run over by a Mack truck that you never saw coming. I think that's the easiest way to explain it. When you trade high probability strategies and you're wrong, you get hammered, okay? And what happens to people, and I'm going to give you really, really specific, okay? Some of you have gone out, okay? Some of you have gone out and you've actually used a strategy called iron condors. What an iron condor is you sell a call and then you sell a put. And you buy a call and buy a put, which is even further out. And it's this hedge strategy. So I sell a call, sell a put, buy a call, buy a put. What do I have? A strategy that the risk graph looks like this. Okay, that's about right. That's what an iron condor looks like. So you have this risk graph that looks like this, and you go out and you sell your iron condor. And the very first time you do the iron condor, you did a really high probability iron condor. So guess what? I made money. Very first time you ever did the trade, you made money. Okay, by the way, I'm just going to tell you right now, what I'm talking about, okay, you better listen carefully because this actually comes from all of the data mining that we did back at TD Ameritrade and Thinkorswim. We were data mining and found a really interesting phenomenon in iron condor sellers. You went out and you actually sold an iron condor or sold options. And the iron condor that you sold ended up expiring worthless. Yeah, you made money. The next month, you did the exact same thing. And guess what? Month number 2, yeah, you made money. By month number 3, okay, you were actually stepping up to the plate, squawking your feathers and so forth. And you turned around, now you're not even trading the spiders. Now you're trading the SPX. You know what the SPX is? Okay, they threw like 90-mile-an-hour fastballs at your head in the SPX. It's a big boy product. So now you're trading the SPX, which is a big boy product. It's 10 times the size of the spiders, but you don't care. You just had 2 profitable trades in a row. So in the 3rd month in the SPX, yeah, you made money in there. By the 4th month, now you're doing 10 lots. That's 10 contracts inside of the SPX of an iron condor. And the SPX, let me tell you, it's the mother of all products. And that marketplace, it actually knows exactly what scares you. And the market says, come on, do a 10 lot. So you do 10 contracts, it goes, I got one. And then the marketplace either crashes or rallies huge and you get absolutely destroyed. And not only do you end up losing everything you made in the previous 3 months, but you end up losing like half of your account. That, people, is the plight of the premium seller. And when I say this on the bottom of the screen, I know, it's like I could see your account. Where do you think that knowledge comes from? Maybe because I could see your account for 15 years. I know everything you've ever thought. Okay, before you've even stepped to the mouse, I know exactly what you're going to do. And it's sick because watching people trade is like sometimes like watching a really, really bad movie. You're like, lady, don't go in there. The guy's got an axe. You're like, oh, I need to check into that closet. You're like, oh, here we go. It's like watching a really, really bad B movie. The problem is you keep seeing it again and again and again and again. And it's one of the reasons that like Spark just like, we have to do something here. I mean, it's a lot of the genesis of TheoTrade. It's a total train wreck. People get killed because they don't understand how to mitigate the risk. By the way, has anybody been through that? The plight of the premium seller? It gets worse though. I'm going to tell you exactly what happens. So you made money, and then you just got just killed. You didn't even see the train that hit you. Anybody get the license plate of the train? Trains don't have license plates. So then when you come in here and you come back and you go, I'm not going to let this ruin me. I can fix these trades. So then people come back after they've sold premium and they go, I can fix it. I know I can fix it. Fix though, fix is a very dirty word. It's a very naughty word. So 15 years in the brokerage business has made me totally a cynic regarding good trades gone bad. You know, people come up with different terms for, I'm fixing the trade. My favorite term is I'm morphing it. You're morphing the trade. So what exactly does that mean? That means more risk, more transaction costs. Okay, you're just shoveling more good capital down a bad hole. I have a better term for fix, an amalgamation of crap. Okay, anytime you're fixing a trade, it's more risk and more transaction costs. Bottom line is, did you realize that you can't actually fix anything in this business without putting more risk on the line? Tell me how you can do it. Okay, because I'll tell you every single time, you're wrong. You can't do anything in this business to fix a losing trade without adding more risk to an already losing proposition. And the first thing you learn in this business is don't throw more good money down a bad hole. Some fixes may work, but the very notion of fixing a trade throws good capital after bad. You have to understand that when trades go awry, you just have to let them go, right? Take a car and you drive it off of a cliff, and then you bring that car to a body shop. What are they going to tell you? You go, that's a nice piece of junk. What am I going to do with that? It's totaled. Okay. The same thing I'm going to tell you of your trade. Okay. Good trade's gone bad. You have to let them go. It's not about the individual trade going bad. Okay. It's about how to mitigate exposure. It's about knowing that one trade isn't going to change your life. Okay. It's about how to build an aggregate position. You need to learn to do this right. Okay. Learn, to how to actually correct good trades gone bad. Now, this is going to get a little deep. Now I'm actually going to show you, right, what we really do here at TheoTrade in terms, of premium selling and premium selling tactics. Everybody ready? Because as I said, it's about to get very deep. So you've already seen this distribution curve. This is the third time now I'm bringing it up. The first one was a $50 stock. The second one was a $100 stock. Then I jumped over to the spiders. And inside of the spiders, what did I do? Inside of the spiders, I showed you the sale all the way out in December, 113 days out of what? Of a 490 call, sold at $1. Okay. I don't ever sell anything naked. There are three things that are essential in this business. Okay. There's one, here's two, here's three. The three things that are absolutely essential. That was terrible. Okay. I must draw these correctly. 2, 3. The first one in here. Okay. You're going to learn to use these tactics to mitigate risk. The first one is actually called a risk twist, okay? Spread. The second one is actually called a VIX vol spread. And the third one is known as a gamma iron condor. These, are your hedges. Those are your risk mitigation tactics, right? So this is all about what? It's all about control of risk. Those three tactics are all about control of risk, and you have to have them, under your belt. At least one of the three have to be placed at any given time to be able to mitigate risk. What do I mean by that? You know what? Let's take the spiders, for example. So where are our lovely spiders trading today? Where have the spiders been trading? The spiders have actually had a range recently from like 460, in this here, I'll just make this even easier than just mentioning it, because a lot of people don't know these particular products. Okay. So the high range is butting up against close to the 460 range. Right now, couldn't be easier. They're basically at $450. So I'm actually going to use in this example, and I'm going to do it as loose as I possibly can, based on the spiders. So here is the SPY, and it's trading at 450. Okay, so the spiders are right at 450. Okay, what am I going to do? Initially, I'm going to go out, okay, and I'm going to sell. In this case, I don't know, let's get crazy. Let's go all the way to a 490 call, which is something I actually did today. So I'm going to sell a 490 call. And let's say I collect $1. Simultaneously, okay, I'm going to be out here. What's out here? On the put side of the equation. We haven't even discussed the put side of the equation. Great. Well, I'm also going to be selling a put. In this case, I'm going to be selling now a 330 put. The 330 put is going to be trading for as much as $2. Now, how could I know that off the top of my head? I don't. Okay, I'm just estimating right now. We can actually go out and we can open up an option chain. I know you see the writing on the screen. Okay, you can open up an option chain. You know, where are the 330 puts trading for? Holy crap, it's like I know this market. You're trading for basically $2. Cool thing is that people don't get, puts are literally trading for double what the calls are, and they're way further out of the money. Look, the market would have to go from 450 all the way down to 330. Let me ask you something. The market goes from 450 to 330. Okay, can that happen? Absolutely, unequivocally, yes. You have 113 days into which that can happen. That is a full-blown, out of control crash to the downside. It would be sweet. Okay. The longer you're in the business, the more you start rooting, like you want to see like wild things happen in the marketplace because it's exciting. I'm going to tell you right now, if we crash and we burn, okay, which is always a possibility, but if we crash and we burn, you're going to have a risk mitigation tactic. I'm going to come to that in just a moment. But I'm not going to just go out and sell this and sell this. Inventory, people, inventory management. What does Amazon do? What is Amazon? Okay, at least on the retail side, Amazon is an inventory management company. What do? Hot potato, hot potato, hot potato. They just want to move as much inventory as possible, okay, through their grubby little paws. All of them do it. What do you think market making firms do? Inventory management. We're going to sell several different positions here and several different positions here. And you think that's hard to manage? It's not hard to manage. Okay, what? These trades are going to make money like 95% of the time. Most of the time, you're going to open a position for 490. You're going to close it. You're going to make money. You're going to open another position. Okay, you're going to close it. You're going to make money. You're going to close it. You're going to make money. Okay, but again, we're going to build some inventory. We're going to sell some 330s. Then we're going to sell some 350s. Okay, we're going to turn around and sell some 300 puts. It's a party, people. We're going to sell some inventory out there. And then we bring on the risk mitigation. I'm actually today, I feel a little froggy today. I'm gonna talk about a VIX volatility spread. You know what a VIX volatility spread is? What is the VIX? The VIX is the S&P 500 volatility index. Most people should know this. When the market goes down, the VIX goes where? Boom, up. It explodes. We're gonna go out and we're gonna use a very, very cheap, okay, which is inexpensive vol spread. What a vol spread does, if the market comes crashing down very, very quickly, okay, the VIX spread puffs up and does what? Actually makes money. So the VIX spread is going to be a definitive downside hedge. Imagine you could go out and you could buy, okay, this outlier. You're buying something that most of the time you're never going to use. But if you don't have it and you need it, you're a dead person. You're just dead at that point because you go out there and let's say that I pay, and I'll give you a perfect example. I'm going to pay $140, okay, every 3 months, just in case we crash. Not saying we're going to crash. I'm just going to pay $140 because that $140, if we do crash and burn, that $140 could save my life because it's going to puff up. That $140, that VIX volatility spread is going to puff up and it's going to give me, okay, a huge hedge. What's a hedge? Risk mitigation factor. That is what a VIX volatility spread does. But what about this upside risk? That's where a gamma iron comes in. A gamma iron is actually a type of iron condor that protects us if we explode to the upside or the downside. That first real shock of the marketplace, when it has a fast move, the gamma iron puffs up, gives you more than enough time to mitigate risk. Okay. There are 3 different risk mitigation techniques. You have to be familiar with these. Okay. If you're not familiar with them, you can't sell premium. Selling premium, again, it's a knowing about which option to sell. There's no question about that. And I talked about which option to sell a little bit. We're selling further out in time. right? And we're doing that and we're making 50, 60, 70% in 30 days. But you still have to have the other side of the equation. The other side of the equation is, okay, what if things don't go swimmingly? What if things rally out of control, right? That's what this business is really about, okay? Listen, this is why you want to sell premium. Premium now can actually be sold. And most people don't know how to do this, but premium can be sold in accounts even under $5,000. You can have a $2,000 account, all right? And you can actually sell premium. It produces positive theta decay. You can actually use this strategy to enhance existing positions. Maybe you already have a stock position. Anybody have a stock position right now? If you do, most people think of like the quintessential covered call. This would be like a covered call, like on steroids. Like you'd be going out there and be selling premium against, technically you could even do this against a 401k. You go, but I can't trade options in my 401k. Nobody asked you to. You don't have to trade options in the 401k, okay? You imagine that you have a 401k and that could have 250,000 bucks in it, right? That's isolated. I know it's in a bubble, okay? But you also might have an IRA. You could actually sell premium here, okay, against here. And if you say to me, like, my brokerage firm doesn't let me, yeah, how about, okay, your brokerage firm will let you do anything you want to do. You just have to know, okay, the right questions to ask or find a better brokerage firm. You never need to buy or sell the stock. The probability of success here is phenomenal. And we haven't even talked about market direction because I'm going to tell you right now, I've been selling premium. And in fact, I'm going to show you some of my track record here momentarily. I've been selling premium this year. Dead wrong about direction. It's fine. Okay. Direction is going to be excluded from this equation. Okay. The market. And I just want to make this very, very clear. This market, it ain't going to go up forever. Okay. I know it feels like it right now. You're like, nah, it is going to go up forever. It's convincing everybody. Okay. The marketplace is not going to go up forever. This is 15 years. Is that not wild? Bubble to stop all bubbles. This marketplace is not going to go up forever. I'm telling you right now, you need this in your life because most people are going to be left in this situation where when the marketplace does start to descend or things get really wild and volatile, believe me, okay, you right now, right, you're on borrowed time. Taper talk, it's happening. They're going to taper. Tomorrow is Jackson Hole. Like, what are you going to do when you can't be a good stock picker anymore? Everybody right now is an absolute genius. I'm serious about that. Everybody feels like a genius. I've been in this business long enough to know, I was here during like the internet boom in, 99 and 2000. You couldn't even tell anybody, don't worry about it. I'll buy the next IPO. Okay. It's worse than that right now. Now you got, kids that are, 18 years old in a dorm room. They go, forget college, man. I'm just going to buy some calls in AMC and we're there. The music is stopping. They're going to start to taper. It's going to start to create volatility in the marketplace. People, it's going to be too late. You need to learn how to do this stuff. Listen, selling premium can bring in consistent returns while mitigating your risk. If you want to sell premium, though, you have to learn how to do this the right way. The risk mitigation is the correct thing. Now, I'm going to talk about criteria for selling premium here momentarily, but here are a few live trade examples. I'm going to tell you more than this. This is more than a few live trade examples. I'm going to show you everything I've done year to date. I realize that we are already at the end of August and there's a lot of trades. I'm just going to rip through them very, very quickly. I will show you absolutely unequivocally every single trade, win, lose, or draw that I have done in what we call, okay, our Theta portfolio. This is Ultima trades. This is exactly what we're talking about today. Variations of all the following trades can be done in an account with as little as $2,000. Obviously, it has to be a funded brokerage account and can be done inside of retirement accounts. I just wanted to make that clear. All right, here we go. I'm actually going to show you a couple of trades. You ready? I'm starting, all right, back before the portfolio officially started. But I wanted to start with this because I just wanted to show you that you could be wrong about market direction. What am I showing you here? First of all, what you're looking at right here, these are just copy and pasted from Thinkorswim. These are copy and pasted from Thinkorswim. This particular portfolio lives in Thinkorswim. This is the opening date, exact time, closing date, exact time. Okay, this is to open to close. This is Tesla. This is the exact option that I'm trading here, the strike, the expiration. This is the opening price, the closing price. Okay, and that's obviously the return. I just wanted you to be introduced to it. Okay, so here's one on Tesla. And the reason I'm bringing this up, Tesla, I sold calls on Tesla. Everybody goes, I can't do that. You can do this. You can absolutely do this. He's like, I can't, I don't have enough margin. Calm down. If I hear one more time, people go, I don't have the margin. You don't have to. There's a way around margin now. And if most people don't know, they released new products to the marketplace, okay, only about 18 months ago, and the product's an absolute hit, and it circumnavigates day trading margin restrictions. Gone. You never have to worry about day trading margin rules anymore. Margin restraints, gone. I have a $2,000 account. Do anything you want, even in an IRA. Here's an 83% return. Okay, next trade, another Tesla short call. Now, again, I'm selling calls. Tesla in December is doing what? Going straight up, and I'm still making money. Here's a 90% return. I opened it for 425, closed it for 42 cents, 90% return inside of 1 week. Here's a Tesla short call, okay? Again, I'm just warming you up a little bit for what we're about to see. This Tesla short call, dead wrong in direction, right? Sold a 1260 call, bought it back just what, a few days later, 58% return. This is a bond short put. Now time out. Now I'm actually into the TheoTrade portfolio. This is the Ultima trades, okay? And in Ultima trades, there's one thing that I'm going to tell you about Ultima trades, okay? I do trade bonds. Don't be scared, okay? Hold me. Listen, I trade bonds. I like bonds. Bonds don't have very much margin. It's a smart trade. It doesn't use up much capital. But most people don't understand bonds. Bonds trade in ticks, which is fractional, okay, denomination. I opened this for 14 ticks, closed it for 6 ticks. That's a 57% return inside of what? It's 1 day of trade. Okay. Next, bond short put, 53% return. Okay. Next, IWM short call. Everybody here familiar with the IWM? That's the Russell. It's the Russell ETF. I opened this on January 25th, closed it on the 27th, 62% return. IWM short call, 53%. Tesla short call, 76% return. Okay. SPY short put. Now we're talking about short puts. Remember what I have done. Okay. I go out and I've created a distribution curve and I have inventory. So what do? I open inventory and then I close inventory and open inventory and close inventory. Sometimes I'm closing a bunch of puts. Next time I'll be closing calls, call. It just depends. Depends what the market's doing. I can't influence the market. All I can do, okay, is put positions on when it's, effective, pull them off. Okay, so here's another SPY short put, 50% return. SPY short put. By the way, these are in order in terms of date. SPY short put, 51% return. Short call, 57% return. Short call in the SPY, 49% return. Look at the dates, all the dates, and I can show you the trades. Opened on February 17th, closed on the 26th. Open on February 9th, closed on the 26th. Okay, 50% return. QQQ short call. Okay, 62% return. By the way, timeout. Somebody asked a question here, like, hey, okay, where are these things from? I'll tell you exactly where they're from. First of all, this is one of my accounts. So it's one of my accounts. I have a bunch of accounts, okay? And I have accounts over at Tasty. So we are full disclosure here. When I say full disclosure, I let you see the account statement. I let you see everything. This is everything I've done on the spiders, 90 days, okay? This is all I'm showing you, okay? All I'm showing you in this little screenshot right here, okay? That little screenshot, it's just taken from here. This is confusing to look at because it's hard to match up the trade. See, to close, to open, to close, to close, to open, to open, to open. All I did is just matched up all my trades. So this one, QQQ, 62% return. Everybody familiar with the Qs? Okay, QQQ, 53% return. QQQ, 50% return. Okay, QQQ, 64% return, QQQ 53% return, QQQ 57% return, IWM short call 56%, IWM 50%, IWM short call 54%, IWM short call 19% loss. It's a loser, baby. Okay, listen, it happens. It happens. Not often though this year. The reason I wanted to show you this one though, specifically this loss, is I wanted to key into it. Check this out. Look at the IWM at that point. It was exploding to the upside, exploding exploding to the upside in the IWM, and I only took a 19% loss because people were worried about that. What happens if it has a 10% gain? You want to see like a 10% gain per month? Yeah, how about that at the beginning of the year? Look at this, watch this, year-to-date percentage. Here it is, the beginning of the year where it's flat. That thing was up 21%, 21% inside of what, 2 months? It doesn't get crazier than that. And I did, I took a loss. I don't mind saying it. I took a loss, 20% gain in 2 months, you'd take a loss too. I only took a 19% loss. IWM short call, 54% return. QQQ short put, 52% return. IWM short put, 49% return. IWM short put, 47% return. QQQ, 49%. QQQ short put, 51%. Bond short call, 50%. IWM short call, 54%. Are you guys bored yet? Because I just go IWM, QQQ, SPY, QQQ, IWM puts in the bonds, 51% return. IWM short call, 50% return. SPY short call, 50% return. IWM, 53%. We're all the way into March now. Bonds short put, 50%. IWM, 51%. IWM, okay, 52% return, another 52%, 53% return in the bond short put, 73% return, bond short put, 59%, bond short put, 56%, IWM, 52, 50%, 51%, Mo short put. This one I was actually trying to establish a position, but Mo, it's for stock we've traded really other than Tesla, 53%. Bond 50%, bond 50%, Tesla 53%, QQQ short call 54%, Amazon short call 63%, QQQ 50%, okay, QQQ 53%, 51%, 50%, okay, SPY short put 51%. This is, we having fun yet? ES short put, timeout. That's an option on futures contract. That is exactly 5 times the size of the spiders. At this point on the year, okay, so this is a portfolio that everybody here at TheoTrade can see. And at this point in the year, I felt it, everybody was like, okay, let's step up the size. Let's stop trading the spiders because the spiders may be a little bit too small. And I decided to actually step up my size. So I went to the S&P options on futures, which is 5 times the size. S&P options on futures are 5 times the size of the spiders. So now we're actually making 5 times as much with each individual trade. So here we are, 50% return. Here's another one, 50% return. Here's another one, 50% return. Here's another one, 51% return. QQQ, 51%. ES short put, 51%. ES short call, 50%. ES short call, 51%, 56%. Bond short call, 53%. Bond short call, sorry. SPY short call, 50%. Bond short call, 54%. 50%. Bond short call, 58%. QQQ short call. We're getting almost to today's date. QQQ short call, 56%. QQQ short call, 31%. I almost lost money on that one because if you looked at the QQQ in like the last, month, where have the QQQs been in the last month? Again, I like to show trades that, I ducked out of like an inevitable wild move. That is an absolutely magnificent move to the upside. I only made a 31% return. This is actually a Christmas tree trade. Christmas is here. This one was actually an 85% return. And this is a trade I just closed a few days ago for a 55% return. Whew. That is actually everything I've done in the Ultima Theta portfolio on a year-to-date basis. Listen, this is a good time to do this. Okay, you got to learn this skill set. This skill set's going to last you a lifetime. And I always tell people, like, whenever you're going to have time like this again, most people are probably working from home. Some people are even quarantined. Again, it depends on where you live. Most of us here in the United States are not, in quote unquote quarantine. I've got a lot of buddies actually down in Australia. I lived down there for about a year and a half. They are actually quarantined. This is a great way to emerge stronger, better financial shape. I'm telling you, you got to learn how to do this. What our members are saying. Michael, I want to thank Don Kaufman and TheoTrade for doing a great job. Stefan, I really think Theo is the best education money ever spent. Marianne, this is actually today, okay? I'm with you, Don K. Those trades make money. No time, no problem. The trades that I'm actually showing you here, okay? These ultimate trades are extraordinarily hands-off. And I like to make mention of this because I think a lot of people assume they have to sit in front of the computer all day. Listen, we sell premium, okay? We tend to have tendency to walk away from it. You can even use good till canceled orders to be able to execute out of the position. But that means GTC, good till canceled, all right, to be able to bail the position. So even a fraction of your time, like I don't want you to think you have to sit in front of the screen all day long. The other aspect I do want to kind of mention, every single trade that I displayed today, every single one was displayed live at TheoTrade. We do text and push notifications as well. So you can follow these portfolios in real time. The characteristics of selling Ultima Premium, the attributes of the selling high probability are undeniable. You never have to buy or sell the stock. Risk, you can kind of fine tune risk to your comfort level. That's something we haven't talked about too much, but if you have like $100,000 account, you can say, I'm comfortable, with X amount of risk. If I have a $2,000 account, obviously you have to be extraordinarily careful with risk. You can actually dial that in for you. You don't use stop orders on here. There's no stop orders, nothing of the kind. You can vary time frames, which will actually help mitigate risk. The probability of profitability is high. It's a perfect strategy to actually enhance your stock portfolio. It's also an excellent tool for those that want to actually just, returns to be able to build account. And new products allow for the sale of options in literally like any account size. And I continue to stress that because it's the unsung hero of selling premium. There's new products out there. Anybody can do this. Building a portfolio of options. Listen, do not allow the option side of this business to intimidate you in any way, shape, or form. Okay. Selling premium can be done for minimal credits, but minimal risk. But the sale of premium, like learning to do this, it's like a massive power saw. If you wanted to go out and I always use the same analogy, but if you wanted to go out and you want to build a house, you're going to have to use a power saw to do so. Power saw is going to be probably the quickest, okay, way to cut through 2x4s and so forth. But if you don't know how to use the power saw, you're probably going to lop off a couple of fingers. Options are the exact same thing. Options will be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market. But if you don't know how to use them correctly, obviously you'll lop off a couple of fingers. Listen, okay? You can sell Ultima Premium, all right? Maybe you don't know much about options. As I said, do not let the options, portion of this intimidate you, because you're going to need these strategies for the foreseeable market future. Once markets start to take off and we start tapering and then we start raising interest rates, what do you think happens to the S&P? What happens if you can't be a good stock picker? You're going to need the strategies, for that forward future. And that forward future, people, this is going to take a decade plus to work out of. You realize when I show you a 15-year chart, how hideous that looks, okay? Only experienced traders see it. They see it and they're like, it makes a good point. If you look at a 15-year chart, and I'm dead serious about this. Anybody that doesn't look at this, the skeptical, eye, look at this. That's 15 years in the QQQ. That should scare pretty much anybody, right? Coming out of this, and let's say we don't even come out of it, but coming out of this, right, is going to be a long, arduous process. So we can show you how and when to sell premium in a matter of hours. We create, here at TheoTrade, detailed recipes for every strategy, including, selling Ultima Premium. And the way to think of these detailed recipes for each strategy, it's like baking a cake. You wouldn't bake a cake without a recipe, yet people trade without one. You got to be prepared for this stuff. This is what you need to know to successfully sell Ultima Premium for a living. What underlying stocks or indices make the best Ultima Premium selling candidates? Like when I say that, what did you see? I saw QQQ. I saw spiders. IWM. I saw S&P options on futures. I saw bonds. That was it. Okay. That seems pretty easy. You have to know how to dial in, the right product. There's going to be products that are going to be in favor. Products are going to go out of favor. I had a little fun in there, and I did a little Mo, a little Amazon, maybe a little Tesla. That's it. Okay. Think less about the product. The product is actually easy. When I say the product, I'm talking about what are you going to trade? Like what you trade, it's everything. If you said, Don, you can only trade the spiders for the rest of your life, you're like, cool, I guess. I don't like a lot of variability. I don't need a lot of flexibility. Why? Because you could do what you need to do. It's not about searching for the right candidate. Okay. It's about dialing in the perfect candidate. Why? Because you have to know exactly what volatility you should seek out. Too much volatility, you're dead. You don't see me trading stuff like AMC. Okay. That's, again, trading stuff like AMC gives all the edge back to the market maker. Gives all the edge to the market maker. People talk about, the market makers are screwing me. Don't let them. Okay, don't let them. I have really close friends that work at most of the market making firms, including Citadel and Virtue and all the market making firms we know people at. Listen, you got to understand too much volatility gives all the edge to the market maker. You got to seek out the right volatility. What options expiration do you select? Anybody here looked at an option chain lately? Now this is on the QQQ, but I love to bring this up. I'll bring up the SPX. because I always call the SPX the mother of all products. Take a look at the SPX. There's 1 day and 4 day and 5 day and 6 day and 8 day. Hike. Like, look at all these expirations. You got to dial in, okay, the right expiration. And you got to be spot on. Too far out in time, ain't going to do anything. Too close in on time, you're going to get crushed by the marketplace, right? We were kind of dialing in that in a little bit. You saw a lot of examples over here, but you got to have the right expiration. What should be the delta of the option I sell? Do you know delta? Okay, what is delta? It's the rate of change of the option for every dollar move in the stock. Who cares about the definition? What is delta? It's loosely associated with probability. But if you actually get the right delta, it's going to get you into the perfect portion of the distribution curve of where you want to be able to sell. What options do I buy against my position? That's hedging. That's we're talking about a risk twist spread, a gamma iron condor, a VIX volatility spread. Okay, you're like, oh, I don't even know what that looks like, but it sounds kind of cool. But what does a VIX volatility spread look like? Okay, we didn't even get into the hedges, right? There's only so much time in here, but I'm telling you, like, if you can't hedge, you're already dead. What does a hedge look like? A hedge might look something like this. Look at this. Okay, that's my hedge. If the market crashes, the VIX is going to be there. Save me, VIX, because that's exactly what it's going to do. You're going to learn what options to buy against your hedge. You're going to learn how to actually build a position. I'm not talking about what options to sell. How do you build the position? How many options do you sell versus how many VIX spreads do you buy? You have to learn how to do that. That's not going to be hard. You still have to learn it. Do I need a large amount of capital to do this in my account? Absolutely, unequivocally, no. All right, $2,000 in your account now, and you can pull this off. What is the right amount of risk for you? We actually help you determine this. Like, you know, there's never a reason that somebody should be like, man, I had no idea that I was going to lose X amount. You're going to know exactly what you can make, what you can lose. What's the right percentage return? By the way, that one's pretty much a dead giveaway. What's the most frequent percentage return that that you saw? By the way, no, I never use a stop loss. I don't need no stinking stop loss. You don't need a stop loss. You're gonna have a hedge. What's the most frequent percentage return that you saw in there? Okay, anybody? A couple of people kind of answering in here. Percentage returns, it's everything. Like, you got to know exactly what your percentage return. You get in, you get out, you move the capital forward. Get in, get out, move the capital forward. Just keep rolling the capital forward. This is about hot potato. Inventory management, people. Only one person got that, right? Right? One person got it right. So how do I protect myself from market crashes when selling options? VIX vol spreads, risk twist spreads. It's that easy. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. And again, it's just like it sounds. When I say recipes in trading, right? Trading, you're going to find out, is all about answering the what ifs. What might be a good stock or ETF candidate you want to sell premium? What's the correct options expiration cycle? How much capital do I commit to generate, premium? What strike options do I sell? What strike options do I buy? How can I limit my risk? TheoTrade has those answers. We build recipes with very definitive criteria. They're literally, these are checklists for each strategy and each unique variable you're going to encounter. And when I say checklist, okay, the whole logic behind this is, if you've ever gotten onto an aircraft and you've watched a pilot, okay, the pilot doesn't just hop into the aircraft and go, everybody ready? Let's go, put on your seatbelts, and they throttle up and they go. It doesn't work that way, okay? The pilots, no matter what kind of pressure they're under and time constraints, it doesn't make a difference. They go through a pre-flight checklist. So, and for them, it's literally going through a checklist. They go through a checklist. They're looking around. Are there any warnings? Are there any sensors? This is what we have to do. That is exactly what we do here at TheoTrade. We literally, step 1, select a candidate. Step 2 is the volatility X. Step 3, what's the liquidity look like? Step 4, let's actually determine the expiration cycle. Step 5, what should the probability of the trade be? Step 6, selecting a delta. Step 7, we go on and on and on. We even take you into exactly how to execute the trade. What does execute mean? Send it. How do you send off the trade? And then once you actually are getting into the trade, once you execute and you fill, then you have to actually determine what? In flight. So what do you do when you're in flight? Market can move up, market can move down. What else can happen to you? You have to answer all the what ifs, okay? TheoTrade is the answer to those questions. What's the right probability for the trade? How many option contracts? You know, when do you close the premium sell? What do we sell off big? How do you bail out of a trade? What if we rally massively, cannot fix a losing position? We answer this. We give you the how, the when, the why. We give you at what price. And I'm telling you right now, that people, it's just the beginning. I'm scraping the surface of the variables that you're going to face while selling Ultima Premium for a living. If dividends are coming, expiration is coming, every variable is covered. Listen, you can read what selling Ultima Premium is. Like anybody can go out right now, you can Google selling premium. 10,000 different returns are going to come up for selling premium. Maybe you even know how to what? To maybe build a couple of trades. Some people have actually sold premium before. That's not what this is about. Okay. You need TheoTrade's recipe for success. 20 plus years trading experience. That's just me. Okay. That doesn't include the 7 other full-time instructors here at TheoTrade, which I'll introduce momentarily. We had access to client order flow, and I say we, okay? I'm not the only one that came from Thinkorswim and TD Ameritrade to help build TheoTrade. TheoTrade is a compilation. Every one of us has beyond 15 years of experience, okay, working in the industry. We have viewed and studied millions of trading accounts, and I specifically ran education at a firm that had the biggest client order flow for the better part of 15 years, both Thinkorswim and TD Ameritrade. And that's where criteria comes from. And criteria is what this is about. Criteria is your recipe for success. The following strategy and the corresponding criteria require the utmost attention to detail. We spent years, literally years, fine-tuning Ultima trades, fine-tuning the setup and the criteria for this class. You follow the steps to be able to build a trade, okay? We built a 5-hour course specifically on Ultima income generation. I happen to be the trade instructor. The class is done recently. It's already archived. We did the class, did it live, we archived it, we cleaned it up. It's ready for you to stream. Before I go any further, okay? TheoTrade is not about selling a particular class. I want to make that clear. We absolutely want you to learn how to sell Ultima Premium. And we want you to view this class, but I don't want you to think we do not here at TheoTrade go out and sell classes for $500. That's not what we do here. It's not what we're ever going to do. And I want to explain this before I go any further, explain about the classes, okay, and what TheoTrade is. Most educators will go out there, will sell a class for $500. Then they'll sell you another indicator for $500. But then, okay, here's the class that you bought, right? Then there was an indicator with it. And then you have to take a class, right, to learn how to use the indicator for another $500. Before you know it, all this is obsolete. You have to take another class. Okay. I'm just going to tell you right off the bat. When we built Thinkorswim, when we were running the education division of TD Ameritrade, we looked at all the other education companies out there, and we saw this common theme. All they do is just sell a la carte and sell a la carte and this stuff, and all of a sudden they jump to this. Okay. What we do here at TheoTrade is all inclusive. And I just tell you this right off the bat. Now, in a moment, okay, in a moment, I will explain everything that is TheoTrade. But you need to understand right off the bat that we are not here, okay, to sell you a class and then wait a couple of months and sell another class. That everything that we do here at TheoTrade is all inclusive. And we will actually hold your hand from beginning to end, okay, from the time that you learn this, okay, and everything. When I say everything, there's some people that are joining us today that have never traded an option before, okay? We give you access to our entire library of everything we've done since 2016, okay, from day one. Again, we do not sell classes. What we have actually built here at TheoTrade is literally the Netflix for traders. Now, allow me to explain this. Every item that you need to be a trader or investor is encompassed inside of TheoTrade. If there's something that you need in this business that we don't offer, tell us, because we'll get it for you. Listen, the Ultimate Income Generator course, the course itself is 5 hours long. It's archived. It's available immediately for streaming 24/7. Now, when I say that, you stream it from our site, but you can also stream it onto our mobile application. So we've actually got mobile application for iOS and Android. It'll also, of course, work. That mobile application will work on any iPad, any Android compatible tablet device. It's fine. Again, you can go and download TheoTrade Mobile. The slide deck for the class, okay? It includes all of the entry and exit criteria. It's available immediately to be downloaded. So in effect, okay? In the next few minutes, you literally can come in here and you can start viewing the Ultima class if you're ready for it. But if you're not, you can start to ramp up here at TheoTrade. That's what I'm going to cover. So hang with me for a moment. The other aspect is I'm not going to charge you $497. We're going to give you a phenomenal incentive specifically today. Ultima Income Generator, this is the course curriculum. So you're going to learn how to generate consistent returns with selling options premium. But here's the curriculum. Obviously, you got to learn how to build a portfolio of high probability trades that generates consistent monthly returns. Okay. Again, starting capital or experience level, push it aside right now because it's not going to make a difference. We're going to ramp everybody up. We're going to give you detailed entry and exit criteria for selling options premium while keeping risk at a minimum. All right. That's critical. You're going to discover a little bit about option Greeks, what delta is, okay, and learn how to manage your positions with option Greeks. Okay, you're going to learn to use the risk array, which in my opinion is probably my favorite portion of this course because it's not going to leave you open-ended as to what your risk is. You can actually come in here. Once you know what a risk array is, you're going to be able to come in there and say, what if the market goes up? What if the market goes down? What if the market stays flat? You can actually simulate every market environment before you ever get there. You're never going to be surprised about what your risk is. You're going to learn how to properly allocate in a way that reduces risk and allows you to minimize your risk in your portfolio, very, very hands off. You're also going to discover risk, okay, mitigation techniques designed to hedge even the most extreme market environment. That's what I'm talking about, the VIX vol spreads, the risk twist spreads, and how to sell premium in small accounts. There's 2 hours of this course is actually focused, okay, on risk mitigation and small accounts. 2 of the 5 hours is actually risk mitigation and small accounts and or retirement accounts with innovative new vehicles. So that's never going to be a problem here that if you say I have a small account. The other aspect here at TheoTrade, and I throw this right up here, okay? Check us out. It's a 90-day money back guarantee. There's no stipulations whatsoever, okay? And I'm just going to make this really clear. You can enroll for TheoTrade today. Anytime in the next 90 days, if it's not for you, it's fine. We'll give you your money back. You never have to call us. You don't have to email us a big, long story. My dog's brother's roommate's friend wasn't feeling good, so I can't, do this. I need my money back. Seriously, no excuses, no questions, no commentary. Just email us. There's one thing we always tell you about TheoTrade. Okay, we want you to be here. We want you to be here, but you also have to want to be here. Like we want people that want to be here. I can't stress that enough. This is not like, we have 6,000 people now on the TheoTrade platform. There's 6,000 people. We don't even do memberships anymore, which I'll explain here in a moment too. We don't, sell you a membership or anything like that. We just say, hey, this is what it costs. If you like us, come. If you don't, we'll even give you your money back. It's that easy. Just email support@theotrade.com if you ever want your money back. And I tell you that up front. You can go right now to theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W as in wow. Okay. I'm not really good at my phonetics. Theotrade.com/SKU. Okay. And you'll see it, money back guarantee in there. Now, before I jump over here to theotrade.com/SKU, in fact, you know what? I will actually jump over there briefly. If you actually cruise over to theotrade.com/SKU and click add to cart, one thing I do want you to know, okay, and I'll just tell you this right now. Again, somebody just asked this question. It's theotrade.com/SKU. One thing I do want to mention in here, okay, it's a single payment. We don't bill anybody. This is not a membership in any way, shape, or form. So I just tell people that right up front. Now, everything that you get with TheoTrade, bonuses, if you will, everything is incorporated into TheoTrade. Everything. Okay. We go beyond a class or one indicator. Like could we sell the Ultima class for $500? Oh yeah. The Ultima class it's excellent. Okay. I've done a lot of classes. The Ultima class, okay, is pretty much one of the top-notch classes I've ever put together. And I've been doing, putting together classes from 2001 when we started Thinkorswim until, last week. So 20 years of classes in Ultima is pretty much top of the game. I could easily sell that class for like $3,000. We don't do that, okay? Because we don't see longevity in doing that. We want you, again, to want to be here. And we built what we feel is like the Netflix for traders. So we go beyond a class or indicator. Like we get that people wanted everything. They want everything to be able to trade. They want everything to be able to invest. They want it at one place. They want it at one price. Here's bonus number one. It's a quick start. It's a beginner's guide. Okay. If you've never put on a trade before, if you already know a little bit about trade, but we give you this. Okay. It's a training that starts you from A and gets you to the point where you're going to be able to do Ultima trades. Complete newbie entering your first trade. And I want you to see what it looks like. Right. So this is TheoTrade. What does it look like? It's a start here menu. And the start here, options 101, options 201, options 301, order execution. I'm just going to say it right now. You could be the most experienced trader in here. That order execution, part 1, 2, and 3, it's going to blow you away. Order execution, okay? 15 years inside of a brokerage firm, okay? We know a little bit about an order execution. I can tell you every nuance from the time you send a trade to the time that trade executes and everything in between. We talk about Citadel, payment for order flow. It's all covered in there. That alone, okay? That alone is going to be worth a couple $1,000s to you. Serious. So there's a quick start guide, right? Bonus number 2, we give you access to over 100 trading classes. I'm just going to tell you right now, we built TheoTrade, okay, and launched in 2016. And we built TheoTrade with over 100 trading classes. That took a lot of time, a lot of effort. There's also 8 now full-time instructors here. Some of the classes you get access to, by the way, from day one. Ultima Income Generator, okay? Small account growth with in-out spreads, guide to surviving and thriving in extreme volatility, volatility back spreads, growing a small account, how to collect income being short, okay? The next big short, that's a risk twist spreads class, right? High probability spreads, iron condor, selling premium, minimizing risk, day trading NASDAQ futures. I didn't say this is all about options, did I? Because it's not. We actually have marquee day traders here. We have swing traders here. Okay, we have an individual that's a professor of finance at Loyola in Chicago who actually moonlights here, that does all of our technical analysis. Okay, Final Frontier, this is the pairs trading class, top 10 skills. Listen, we give you access to everything, okay, that we've done. This is actually, here's some of the classes. If you want to see what it looks like, it's broken into option classes, option newbies, technical analysis, day trading, stock trading, bonds, futures, pairs trading. We even have mindset. We have an onboard psychologist here that works through that, right? Like for the option strategies. And again, you get access to this from day one, right? There's no other resource in this industry, nothing that even comes close to this. And I'm going to tell you right now, you could spend $30,000 at going from education to education to education to education. You're never going to find anything that comes close to what we do here at TheoTrade. And that one, okay, with a money back guarantee, you should check it out, right? By the way, bonus number 3, this gives you an all access, okay? All access to TheoTrade for 3 months. What this basically is, it's an all access TheoTrade VIP membership pass. It's free. 3 months of unlimited access to TheoStream. TheoStream is watching us trade live throughout the course, okay, of each and every trading day. So if you don't have time for that, it's not a problem. It just comes with it, right? We actually provide real-time trade ideas, real market insights, right? We do text and push notifications of trade ideas, all right? There's 5 distinct trading portfolios. Speaking of which, I want to go back here for a second because I didn't say this. When you're filling out the enrollment form, right here where it says phone number, okay? Put your phone number in right here. Why? Because that will automatically enroll you for text messaging. If you live in a part of the world where you cannot receive text messages from the United States, it's not a problem because we also have a mobile application. You can download the mobile application and then you get push notifications on your phone. Daily coaching sessions, also with timely topics, meaning that we're not just barking at you all day long, trade, 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 trade. We do daily education, you know, an hour a day from a professor of finance, okay, is what we actually provide you. Instructors also directly answer your trading questions via email. Boy, I put a huge amount of weight. If there's one thing here at TheoTrade, okay, I put a huge amount of weight into, it's right here. We will answer your email and we will answer trade related questions. You can fire a trade at us and say, am I doing this trade right? What's that worth to you? A couple of $1,000s a year, at least. You can say, am I getting filled at good prices? You send us anything, it's fine, okay? You can send us trades and we will actually respond to you about those trades. And this is not from, you know, we don't have like support staff answering the trade related questions. This is our instructors. Speaking of the instructors, here they are. Jeff Bierman, Jeff Bierman actually also came from Thinkorswim and TD Ameritrade, but this is your professor of finance at Loyola. So he moonlights with us here at TheoTrade. Again, he's an analyst, trader, and former chief market technician. If you've ever been on the Thinkorswim charts, Jeff actually built over half the studies in the Thinkorswim charts. Matt Williamson, market neutral and premium selling option strategist. Matt is kind of our resident, like in-house engineer type geek. He's our spreadsheet geek. Corey Rosenblum, senior strategist and resident swing trader. So Corey I've known for about 20 years. By the way, Corey also has the designation CMT. Jeff Bierman has his designation CMT. Brendan Chapman has it. We have 3 CMTs on staff. You know, the only other firms that have like 3 CMTs on staff, I mean, you got to look at places like major banking institutions. Okay. Corey is over a 20-year veteran of this business as well. But again, swing trader. Brandon Chapman also worked for both Thinkorswim and TD Ameritrade. Brandon used to write the course manuals for the classes that we taught at TD Ameritrade. One of the classes that Brandon wrote the manual for, that class was 24 months in length, okay, and literally cost over $20,000. So Brandon actually wrote the manual. He'd be the first one to tell you what we do here at TheoTrade absolutely, okay, crushes what we did back at TD Ameritrade. And here, it's not even a fraction of the price. That course was over $20,000 for a 2-year course. Then we have Steve Slim Miller, 43-year veteran stock options and futures trader. Slim's biggest attribute is probably his classes here, specifically on mindset. He's our resident in-house psychologist. Tony Rago, NASDAQ futures and intraday strategist. All Tony does all day long is calls out trades. In fact, if you ever wanted to see Tony, Tony's live. Want to see Tony's live? Okay, I'm just looking at my clock right now. Tony's live. Oh, I apologize. This is actually Steve Miller right now.
There's going to be any real dramatic moves.
It's actually Steve Miller live. So I do apologize. It's Thursday. I was thinking it was Tuesday. So this is next, Blake Young, market profile, futures, currency, and commodity trader. Blake is our most recent acquisition here. Also comes from Thinkorswim and TD Ameritrade world. I'm stoked to actually get him because he's got market profile behind him. This is actually just a quick shot of most of us working remotely here on Zoom. In addition to this, you get 59 proprietary indicators and scans. Okay, this is basically anything that we build here in terms of like special indicators. We just give it to you. Gravity points, expected move, Quantix. I'm going to give you the expected move indicator here in just a minute. NQ levels, position tracker, IV rank, sizzle index, SPX, expected move. It's another $1,800 in indicators. Bonus number 4. This is access to the TheoTheta Live portfolio. This is what Ultima Trades is. We give you everything. It is a positive theta portfolio, meaning we sell premium. This actually started, okay, in the beginning of 2021, no holds barred trading approach. You get to see everything that we do. When I say everything that we do, like, listen, I will pull up an account anytime, any day, okay, upon request, right? We'll show you every single position that we put into the account every time. This is the account statement, okay? This is Tastyworks. This is my trading account. This actually happens to be another IRA. So I have multiple IRAs, and this is another IRA that I'm trading in right now. I let you see everything. It's no holds barred approach. We also have, and again, it's me. I run the TheoTheta portfolio. Full disclosure, opening, closing, hedging, everything. We also have TheoTheta small portfolio. The small portfolio is for smaller accounts. That's what you just saw over at Tastyworks was the small portfolio. This is actually what the portfolio looks like. If you looked at it on our site, okay, it's just a spreadsheet and shows you trade, exactly what we're doing when we're opening and when we're closing them, okay? We also, if you look at this and you're like, oh man, this is a lot of stuff. I don't have 6.5 hours a day, Don. Nobody has 6.5 hours a day and sit in front of the screen. I get it. If you just want to follow the Theta portfolio, you can actually get an update every Friday. Tomorrow morning, I will record an update. That update will be out by midday. Okay, you can see the last update was done August 20th. Well, there'll be another one tomorrow, August 27th. On those particular updates, in 12 minutes, I incorporate everything that I've done, okay, in the previous week, both in TheoTheta and TheoTheta Small. So it keeps you completely up to date, all right, inside of 12 minutes every week. And these trades are not about like, I got to get them on now, right? Markets could move a little bit tomorrow, but that's all right. This portfolio, it's there. You guys can follow it. Bonus number 5, technical analysis toolkit. for those of you that are market technicians, technical analysis 101, 201, MACD indicators, pattern recognition. There's 21 other technical analysis classes. Bonus number 6, the day trading treasure chest. This is actually Tony Rago and Corey Rosenblum, okay? Trading intraday, NASDAQ futures, intraday, ES futures blueprint, all right? High probability intraday trading systems, 11 other day trading classes. Bonus number 7, listen, write this one down. Every person that comes here to TheoTrade should write this down because it gets lost. 5 essential building blocks, successful trading. That's actually Steve Miller, one of his primary classes here, okay? You got to watch this class to change the whole way that you view this marketplace, change the whole way, in your outcome on markets. I'm serious. I don't care how experienced you are. The more experienced you are, the more you're probably going to get out of this. The 5 essential building blocks to successful trading. You get access to it. When that course originally came out, we did sell it for $1,000. Okay. After it was out a couple of months, we're like, this is not right. Everybody needs to see this course. So what we actually did is we cut a deal with Steve Miller and said, like, we'll just pay you for the course. So it doesn't matter what we pay for the course. We just pay a flat rate for the course. We want to give it to everybody. I'm telling you, we paid tens of thousands of dollars for that particular course. You need to watch that, right? It'll change your whole outlook on it. It's worth it. Okay. Again, that's in our mindset mastery, 5 essential building blocks, successful trading. Number 8, quick start guide to Ultima trades. Some of you have experience. Okay, you don't want to watch the 5-hour class. So we actually built as like a quick start guide. Like, you buy, I don't know, you buy a new computer, or you buy a phone. There's always a quick start guide. Just open it up and you're ready to go. That's exactly what we built in a PDF file to quick start guide to Ultima trades. Listen, what our members are saying from Jeremiah. My first 4 trades following exactly the details in your Ultima class just closed out using GTC orders set right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Listen, TheoTrade includes everything. Everything you need to invest in trade. We give you classes, we give you coaching, we give you email access to the instructors. Again, I put huge weight into the email access because nobody does that. Okay, most of us are former brokers. We understand this business. Live trading room access, indicators and scans, mobile access, meaning that you actually have access to us on the mobile device. Everything you're going to need to succeed. We've literally built the Netflix for traders. It's $297 for 3 months. This is not an introductory price. I want to make this clear. That's not an introductory price. This is not a membership. Okay, we charge you $297. Awesome. If you want to come do it again after 3 months, how much is it? $297. You want to do it again after that? How much is it? $297. We do not auto renew. We don't auto bill. We don't do any of that. People don't like gym memberships. I don't want to make a gym membership because if it's a gym membership, oh my gosh, I can't get out of the gym membership. How do you get out of the gym membership? I don't know. You have to cut off an arm and like send it to them in the mail just the right time. We don't do that. For $297, we give you access to everything. And people go, how could you do that? It's not very much. And how come other firms aren't doing this? We have 6,000 people on the TheoTrade platform. There's 6,000 people that are logging in and out of the site. You know how we built that? Because it's done what's right. It's $297 for 3 months. And I tell everybody, you could spend literally $30,000 in market education and you're not going to get what you're going to get here at TheoTrade. Okay. And there's no pitch to that. Listen, it's money back guarantee. Here's the items that you actually receive with this. Ultimate Income Generator course, check. Access to over 100 more trading classes, check. New monthly classes. Yeah, we have more monthly classes. In fact, I have a class coming out in September. Okay, the trading room, the actual chat room. So there's a chat room in here. You can talk to other clients. In fact, I didn't even do a great job of showing you guys this today, but I was showing you. That's Steve Miller in there. Let me delete all these marks in there. That's Steve Miller. But again, okay, dippers denied today. All right. Kill the roundy. This is literally our chat room where people are commenting in constantly. And any given day, there's over 3,000 people in and out of that particular chat room. All right, we give you access to all of that. We actually text push notifications, 59 proprietary indicators, daily coaching sessions. And again, we answer questions by email. Go to theotrade.com/SKU now to enroll. There's a money back guarantee. It's completely riskless trade. In that first 90 days. So you pay $297, you get access for 90 days. Then you make a decision after 90 days. Do you want to do it again? And we ask you, okay? But in the first 90 days, there's a money back guarantee. If you're not satisfied within 90 days, just email us. Okay, email us, support@theotrade.com, receive a full refund. The money back guarantee stipulations, there aren't any. Why do we do that? There's nobody that can do what we do. And I know some of you guys actually tune in, and we've had people do this, and people even tell us this. They send us emails, and I'm going to give you what people do. They come in here, they go, I'm going to pay the $297. I'm going to check out everything I can possibly watch over the next 3 months. Then I'm going to cancel 2 days before, and I'm going to get my money back. I don't care. Do it. Get 6,000 members. We're going to be okay. We want you to be here. That's it. We want you to be here. And if that's what you want to do, it's fine. It's really funny though. People email us and they go, I initially was going to pay $300 and then cancel, but they're like, that stuff is good. And there's always more coming, and even people here, I say this all the time, even people that leave, nobody ever leaves TheoTrade. They all come back. Okay. No one can keep up with the pace to what we're doing. And you know what? If you get bored of somebody, don't worry. We're always bringing on new instructors in here. Okay. Why? Because we're building a community. I mean, you can't call your brokerage firm anymore. Like, what, you're going to call, Charles Schwab? Hey, Charles Schwab, am I doing this iron condor right? You can't even talk to anybody. That's why we actually allow you to email us. Again, there's a 90-day money back guarantee, no stipulations. Okay. And if you receive a refund, you can keep bonus number 1 on us, which is the intro guide, right? Get into TheoTrade now. We're going to work with you directly to incentivize you. There are 30 riskless spots available specifically today. All right. That means the first 30 people to enroll today get into the riskless spot. And we do this simply, number 1, to incentivize you, but number 2, because we give you unlimited email mentoring. I mean, there's a ton of people that are emailing us constantly. We can do about 500 to 600 emails on a given day when they're busy, but net, right? Listen, send us your trades, bounce ideas off of us. That's why we kind of limit it. 30 riskless trade spots. All right. I'll let everybody know that enrolls today. I will let you know that you have enrolled. Okay. And you're one of the 30 spots. The $297 riskless offer has never been available before with Ultima trades plus the live Theta portfolio. But what we changed in here, there's no stipulations. No stipulations to the money back guarantee. Okay. This comes from John. My closed year-to-date profit from Ultima Trades is paid for my yearly TheoTrade subscription. That comes from John. Again, Ultimate Income Generator. All right, this is all yours. Quick start guide, 100 trading classes. This is the trading chat room, and of course, email support. The Theta portfolio. Okay, technical analysis toolkit, day trading treasure chest, mindset mastery, and quick start guide from Ultimate Trades. Go right now to theotrade.com/SKU. In fact, you can even follow me to this link. theotrade.com/SKU. It's S is in Sam, K is in kick, E is in echo, W is in wow. Again, my phonetics are not very good. If you go over to the site, I just want to take you through a couple of things. First of all, when you click add to cart, in here, filling out the information, as I said a moment ago, put your phone number in there. It will automatically enroll you for the text messaging. Number 2, under payment info, it's a single payment of $297, or you can actually do $149 or even multiple payments of $100. That's up to you. Okay, whatever you're comfortable with. Listen, there's money back guarantees on it all. That's actually why I am bringing you into this. All right, you can even do PayPal and the pay later over here, or complete my purchase. Okay, whatever it might be. It is literally that easy to enroll for it. So you go to theotrade.com/SKU, and I'm going to answer some questions for you guys while you're enrolling for this. The auto expected move indicator is found on this page, theotrade.com/SKU. The auto expected move indicator is found on that page. Again, I reiterate, there's a complete money back now guarantee on this for 90 days. There are 30 of those riskless spots initially available. And I'll read off people's names if you're comfortable with that. Just the first name and the last initial. It takes me about, because I've actually got it on my phone here, it takes me about 5 to 7 minutes as you enroll. It takes me about 5 to 7 minutes before I actually see your enrollment populate into my screen. So just be aware of that. So I'm going to read off just some generalized questions for you guys. And again, I get every single question answered here. As I keep saying to you, like, listen, we want people that want to be here. What our members are saying, this comes from Jeff. Okay. And this says, wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, not beyond my capability. After each session, I watch the recording and do the homework. I feel each week my knowledge of options trading is growing steadily and rapidly. Obviously can't speak for my classmates, but it's going very well for me. Thanks for the great instructing. Comes from Jeff. This one actually comes from Todd Summerall. And I wanted to mention this for a moment. So the reason I brought this one up is because it's an email that was sent to me and ultimately said like, hey, I have a lot of risk on right now. Am I going to be okay here? And it says, don't know if you remember me, but I emailed you a couple of weeks ago and told you my delta was positive 1,000, a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo had no clue about, portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. So you can use this if you want, and I did. And the reason I actually wanted to show you that particular email is specifically because you can email us real questions. You don't have to say that, I have a friend that has an issue right now in the marketplace. Email us. We'll be direct with you. You be direct with us. We'll be direct with you. Okay. Some of your questions answered. Again, I'm going to answer specific questions here in just a moment. Just want to make sure that some general ideas are out of the way. Again, I threw the address down here. It's theotrade.com/SKU. People always ask this question, what do you need to get started? You need a laptop. You don't even need a laptop these days. You could probably use any type of tablet device and an internet connection. We have everything you're going to need to get started, from absolute novice, some of the most extreme traders. Number two, this is not a membership. We don't auto renew. We don't auto bill ever again. You pay $297 today. And even that has a 90-day money back guarantee with no stipulations. All right. If you want to do it again after 90 days, you pay $297, and that's up to you. Okay. Number three, we're now providing a TheoTheta weekly video update. So you don't have to tune in a tremendous amount. In 12 minutes, once a week, I'll update you on every single trade that we do. Number four, TheoTrade archives everything. We understand you can't necessarily watch live trading sessions. We archive everything that we do here. Number five, we provide you access to TheoTrade Mobile, where you can actually download archives and watch them offline, meaning that on your mobile device, you do not have to be internet connected. You could be in a plane at 30,000 feet and be streaming a recorded session, meaning that you've actually downloaded it. And instead of streaming, off the internet, you can actually just watch it off of any of your device. We have that on TheoTrade Mobile. You can even speed up and watch everything at 2 times the speed on mobile. Okay. Add your cell phone number when you enroll to receive trade ideas, okay, and text messages when we actually do trades. In fact, one of the things I'm a little distracted with right now, if you guys haven't noticed, markets are moving, okay, and markets are moving here. I get some trades out, and that's exactly what I'm planning on doing here momentarily. So for those of you, if you're enrolling today, we're actually going to fire off a couple of positions. It looks like by the close today. So moving on over here, you can email us anytime. You're going to receive a response within 24 hours, including trade-related questions. Okay, so you can email us anytime. Just the only reason, the only reason that I really stress this with 24 hours, don't email us, please, please, please. Okay, do not email us with 5 minutes to go to a close. And hey, there's 5 minutes to go to expiration. It's Friday. Listen, we trade. And although I appreciate that you have risk on, we trade. And when we're trading, like, I can't watch emails, every second of every single day. So give us 24 hours. We'll always give you a response. Most of the time, we respond to you within about an hour max. We literally have, we sit there all day long. We answer emails, we trade. Number 8, you're going to gain access to everything we've done in the previous 5 years. Classes, coaching, every second of TheoTrade since the day we started TheoTrade has been archived. Every single second. All archives are searchable. We built our own little in-house search engine. It's there. Number 9, variations of the trades available can be done inside of an IRA retirement account with as little as $2,000. Okay, you can do these types of trades inside of a retirement account. You can do these trades with as little as $2,000 in a margin account. Number 10, Okay, we at TheoTrade can actually help you get approved for options at several major brokers. Never let that be an issue. Okay, remember there are 30 riskless spots available today. Get results, take action, enroll for TheoTrade. Again, there's no risk to you guys whatsoever on that particular front. I'm gonna answer a few individualized questions on here. Again, what our members are saying, but here, let me just throw up this this page and answer some of the specific questions for you guys, and then we'll call it a day. When I say I want to answer specific questions, I want to make sure that everybody gets everything answered. Okay, that's what we're here for. We're also in the chat here on Zoom answering questions. By the way, first, just a handful of names came through. Donald B from New York, John W from Oregon, David A from Colorado, Ruben B from California, Eduardo G from Florida. I'm just reading off the names of the first batch. It takes me about, again, 5 to 7 minutes before I actually see your name populate. That's the first batch of names that has just come through that have not only enrolled, but are part of the 30 riskless spots left. Okay, and again, I can see some more people coming through momentarily here, but we'll cover that as we actually go here. And again, it takes me a few minutes to be able to see that. Let's get to some specific questions that were covered. Okay. Oh, you know what Joseph was actually asking? Please explain how to estimate the amount of exposure on a trade when you're naked. So one of the things, Joseph, that's really, really important, okay, is to understand that we're not really allowing you to go completely naked. We have hedges. We're just not hedging in the same product that you're selling in, okay? And that is, you know, it's a little bit elusive to some people because they're not familiar with this, but I'll just give you an example. If you were to sell puts naked in the S&Ps and the S&Ps crash, you're in big trouble. But at the exact same time, we will actually put on a hedge, okay, inside of the VIX. So if the S&Ps crash, the VIX would absolutely explode. And people are always looking for this perfect, you know, one-to-one, you know, hedge. Hedging doesn't need to save you everything. Hedging needs to soften the blow that you're taking, okay, in the midst of an extreme environment. All you need to do, and all the hedge needs to do, okay, is just mitigate a small degree of exposure, okay, and overall, your returns are going to be positive and phenomenal. We don't have to stop all the risk. We have to stop, okay, some of the risk, okay, and mitigate your exposure enough for at some point to be able to get out if you need to be able to get out of positions. All of that is actually taught inside of the Ultima class, where we use what's termed a risk array. What the risk array shows you, it says, what if the market goes up 10% or down 10%? If you've never seen a risk array, again, the class actually teaches exactly this, but and I don't do this to intimidate in any way, shape, or form. But the risk array, and this is an actual position in here, so there's positions in here. The risk array, okay, can look something like this and go, oh my gosh, that's crazy. Just calm down, because it's actually really easy. What if we go up 10% or down 10%? What will I make? What will I lose? I'll laugh, I'll cry. Like, listen, people, okay, I say this is no holds barred. Like, this is what I'm making today. That's just that account. Let's actually aggregate my 2 accounts in here. All right. These accounts are up $8,500 today. There's nothing, again, I'll stack up all the positions here. There's nothing that we will not show you here. Okay. There's nothing that we will not show you. We'll show you every amount of margin, what I make, what I lose. Okay. Again, it's a no holds barred approach to learning this business. And we'll show you every single position that I have on, okay, win, lose, or draw, okay, hideous or not hideous. And these, you know, this is good. This is how you learn this business, not from somebody, you know, behind smoke and mirrors, okay? These are real P&Ls that you're seeing, okay, in real time. All right, next question in there. Oh, somebody said, what if the SPY goes up by 10% a month? No, that's actually easy. Do we take a stop loss? So we don't use stop loss orders here ever, okay? We actually use risk mitigation tactics, which basically means you'll never use a stop order, because the stop order, the fail rate of a stop order is incredibly high. And when I say the fail rate, wide bid offer spreads, volatile markets, it'll crush you. We use hedges, and hedges will actually mitigate risk. And the cool thing about a hedge, the hedge doesn't stop you out of the trade. The hedge is there to soften the blow and allow you to remain in a trade that isn't necessarily working. Maybe the market turns around, maybe it doesn't. That's the great part about the hedge. Now, if you actually were walking and balancing on a wire, and you were to fall off that wire, you have a net below you, okay? That net's gonna work. As long as that net's there, you know, and it actually makes the balancing act a little bit easier, okay? Knowing that that net is there, you're never gonna get into this position without having, okay, that net. Somebody asked the question, are stock options liquid? They're massively liquid. I showed in the spiders there, in the initial section here, I showed in the spiders, okay? There was, I mean, just incredible liquidity. The spiders right now, what are they trading? 3-4 million contracts right now? I mean, it's incredible how far the liquidity has actually come into these markets. It's, again, just phenomenal liquidity out there. All right. By the way, which side of the skew do we sell? You'll actually be on both sides of skew. So there's something actually taught in the class that, you know, the put side plus the call side actually gives you more edge. So the skew in the calls is down, the skew in the puts is up. Okay. The calls just pretty much ice the cake against the puts that you're selling that are full of skew. So what's your expected move differential from the expected move given in Thinkorswim? The expected move, okay, on Thinkorswim, by the way, I helped build the equation on Thinkorswim. All it does is it takes the Thinkorswim expected move and applies it to the chart. That's it. That's all that study really does. So yeah, no, I actually kind of appreciate a couple of the questions that are coming in here. By the way, again, liquidity inside of the options market. Just wanted to show you that for a second. By the way, a few more names popping through over here. Randy G from Pennsylvania, Mark W from Colorado, Bradley W from Florida, MW from Arizona. Yay, Arizona. Sorry, nobody ever comes from like St. Croix. So, you know, I still own a house in Arizona as well. So we got an Arizona person in here. Anyway, in the spiders, and the spiders is one of the most liquid products out there. Look at this, 3.5 million contracts have already traded today. But let's go off, you know, and look at something like Apple. And Apple's another marquee product, almost 1 million contracts today. It's a brave new world, people. And as I said to you guys earlier, they're threatening taper talk right now. So with threatening taper talk, all right, markets, they're getting a little wild. This is stuff that you're going to have to learn for the foreseeable future. And, you know, it's not being like the bearer of bad news. There's a lot more to markets than markets just going straight up. You got to actually learn to sell some premium, mitigate risk. And there could not be a better time to do that. I'm going to stay on here. I'm going to answer a couple more questions for many of you. Again, I appreciate your time spent with me today. It's TheoTrade.com/skew. There's still more names coming through right now. And I apologize if I did not necessarily read off your name. Here's a couple more. Janice Z from Texas, Robert W from Arizona, Mark S from Montana, Robert F from New York. Okay. I thank everybody that tuned in today. Those of you that are enrolled, you can hop right now inside of TheoTrade and check out and listen. It's a little bit of a different language. It's going to take you a couple of days to get comfortable in there. I will be on first thing tomorrow morning at the bell, 9:30 a.m. Okay, Eastern time. We're broadcasting. In fact, I actually start broadcasting at 9:20 Eastern time each and every morning. Thanks everybody for joining us here at TheoTrade. Have a wonderful afternoon. Bye-bye.